Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This Simply Talks and live with another live session with you all on this Sunday morning. And I would like to talk to you about a number of points that I made up on a couple of stocks that I would like to talk to you about. Just give me 1 minute and I'll be back with the session. आ जाए आके बैठने मुझे टाइम जी काम कर रहा हूँ So hi there. Actually, someone was at the door, so I had to check. All right. So today I want to talk to you about a couple of stocks, and these stocks have had a contrasting movement from in terms of the last 2 3 years movement, and would like to talk to you about it. These two companies into different sectors, and plus we'll talk about the markets, and also I'll also answer your queries as well. So let's get things going. So, a disclaimer first of all that I'm not in favor or against any company that I talk about. So, any position that you take in after understanding whatever I talk about, it's all on your discretion. So, the markets have done well. A very good morning to you, Be Kind. So, markets have done well over the last 1 or 2 weeks. We'll discuss about that. Let more people join in as it is a Sunday morning. So, hopefully, more people will be part of this session, and then I'll begin the session in earnest. I hope you're able to hear me and watch me clearly. So, Praveen, hello to you. Ankit, a very good morning to you. Thanks for all the support. A happy Sunday to you, Bipin, as well. Nagraju, hi. Hope you're doing well. Shankran, hi to you as well. Matthew, a very good morning to you as well. Bhupinder, good morning to you. So, it looks like a number of people are joining in. So, before you, you probably open the session in earnest, just want to talk to you about some of the sporting events that is going on. So, US Open is going on, and things are moving on pretty swiftly, and a lot of seeds have gone on the wayside, and we'll be looking forward to the fourth round matches from today. So hopefully that goes well. Plus India Pakistan again today. So it's going to be interesting with no Ravindra Jadeja, who was the you can say destroyer in chief in for Pakistan last Sunday, and did extremely well, and India ended up winning by him coming in at number 4. He did extremely well batting at number 4. Now he's not there. It will be interesting to see how the combination would work out. I still believe Akshar Patel may not play, and it could be a situation where Dinesh Karthik and Rishabh Pant both plays, but then who will bowl? Maybe if Hardik Pandya is fit enough, he can bowl 4 overs. But then if Akshar Patel plays, then one of the two misses out. But in my opinion, Rishabh Pant should be playing this match, because you never know, if your batting falters at the top, you really require one more batsman. That's my opinion in the top 7. So with no Jadeja, I think Pant should be playing this. Pant is a better batsman than Akshar, but Akshar do a ball 3 or 4 overs. So it's going to be interesting. I think Akshay Patel would end up playing, but I would sincerely hope Rishabh Pant as well. So Rishabh Pant plays as well. That's my point of view. So we'll see how that works out. Zimbabwe have beaten Australia, and that was extremely interesting. The way Zimbabwe played it out yesterday and bowled a very strong Australian lineup with David Warner, Steve Smith, Marcus Stoinis, and many others in the ranks, and yet in Australia they bowl out Australia for 141 and ended up chasing that as well. It was a tremendous victory, the first win for anyone. I mean, the first win for Zimbabwe in Australia over that period of time. Praveen, thanks for your contribution. Can I add on Kilpest and Hester Biosciences? Kilpest, I can say if you have a 3 to 4 year time horizon, at least 2.5, 3 years, yes, these are decent levels to buy. A disclaimer, I am invested into it, looking forward to a lot of corporate events that could happen in there. And the way the movement of the stock is after, you can say, below normal results, below satisfactory results of around 11 crores of sales, it says that it really tells you that there is something going on. So that's a buy. I won't say you buy into a Hester Biosciences because of what is happening with Sequent in terms of numbers. So I won't say you get in there, but Kilpes, yes, that is one stock you can definitely look at around 370, 380. All right. So coming back to that point, Zimbabwe played well and eventually got over Australia, and this is the first time they have done that. So hopefully they will be a force to reckon with in the World T20 as well. Although it was a one-day format that we are talking about in which they beat Australia, so it could be interesting to see how the first round of the T20 World Cup from October 16 works out. And so a lot of things to look forward to in that domain. HS Pranoy doing well in the BWS series events in badminton, that augurs well. India has I think India will take on Norway away, or maybe at home. That's a Davis Cup tie that India has this month. And in football, India will take on a couple of opponents in friendly internationals this month. So a lot of things to look forward to before the World T20 that is in October. So really looking forward to all these things. And why I'm talking about uh, all these things is that once you are an investor and you're invested into companies, even if you are a slightly longer term trader, say a 5 6 months trading horizon you have, then there is not much you can do with the everyday market movement. I'm not a intraday trader, I'm not an FNO trader, etc. So I don't go about that. I pick stocks and hold on to them to make profits or losses. This time around I made a lot of losses this year, so need to add both of the points. But in terms of the market, let's come back to the market. So markets have done well, considering what is happening in the Dow Jones, considering what is happening in Europe. Market has done exceedingly well to hold on to 17,500, and the way the FII data is coming out every day, it gives me a lot of pleasure that finally FIIs look like coming back into the market, because even on days when the market is down, there is no heavy FII selling. So that is a clear indicator that the market is not ready to break 17,000. It can very well go to 17,200, 300 if the turmoil continues in US. Mind you, even in US, I think everything should be priced in by the middle of September. I think by 15th, 20th of September, these things should be priced in the next 2 weeks. So I think we are looking at a Dow maybe at worst going to 29,000, 2,000 point more decline. Nifty going to at worst 17,000. And if that really happens, I would say buy into good quality stocks. And if you have the money, put in all the money around those levels from a 2 year perspective or 18 months perspective, even not even 2 years. If you even look at a time horizon where you have to sell by April 24, I think 17,000 would be a very good level. So in my opinion, 17,000 is your long stop loss, and we are looking at new highs by December and then going further higher in 2023. I think 2023 year of 2023, the calendar year should be pretty good. across the board in the market in good quality, high quality, debt free, profit making companies. I'm not talking of debt laden companies or anything. I never talk about it, and I'm not in favor of those. So I don't even analyze those. So I look at debt free, profit making, profit churning organizations, and mostly they are in the consumer domain. So those companies, in my opinion, is going to come back into four. And taking this discussion further, the two companies that I would like to talk to you about are from the consumer domain. One is from the auto domain in a slightly different manner, and the second stock is from the white goods. And these have had contrasting history over the last 2 months or so. Over the last 1 year or so, these companies have had contrasting movement in terms of stock price. So one of those stocks has been Asahi India. Asahi India has performed exceedingly well, and we have seen that, and probably most of you would understand after it got covered in on CNBC and on other channels as well, that they are into making glass frames or glasses for windows, etc., for many of the commercial vehicles as well as passenger vehicles. And they are really selling big, and the sales are going very well. Now the stock has gone up a lot. So the stock has gone to 650, 640, around those levels, from merely 250, 300 just a few months back. It has doubled in matter of weeks. So at this point of time, what I would say in Asahi India, what one needs to do is, somebody is holding it from lower levels, keep on holding on to it. It's heading towards 1,000 in a year's time. Somebody who wants to buy, wait for levels closer to 600, 610. Any levels closer to 600, 610, very good levels to get into. There have been a long term breakout from 570, 580 levels. So I think around 600, Asahi India is a 2 year buy with a target of 1,000 in about 12 to 15 months, and then we'll take it from there. Numbers are now gaining momentum, and I think with the auto industry coming back into shape, I believe from 2023 onwards, it should end up doing extremely well. So that's a buy. It's not a very small company, but not very big either. So it's a smaller mid cap company that you're looking at. So keep stop loss according to your risk appetite, but it looks like it's headed much higher from these levels, and any consolidation or decline is a buying opportunity. Second stock, which is in the consumer domain, white goods domain, and that got lost over the last 5 years. I think over the last 5 years has done nothing, and the stock has given pain to most of the investors. But now it's looking like things are coming back with the kind of June numbers it has produced. It has produced profits of 83 crores. It has produced sales which doubled year on year from last June. So things are coming back for Whirlpool. I think Whirlpool of India, now with the kind of profitability and EPS numbers that they have started to show, wait for numbers in September. Any declines towards 1700, 1750 is a buy. Even at current levels, you can go ahead and buy. Its all-time high has been 2500. I think it can touch 2500 over the next 1 year. Remember that the best of the seasons would now come in or kick in from September onwards, and numbers are only going to improve year on year if we go by the margin picture and the numbers that they have produced in June. So I believe that FY23 will be pretty good, and FY24 will be even bigger. So in my opinion, Whirlpool is a buy on any declines and at current levels, with a target of 2500 in about uh, a year's time or so. And just keep on accumulating on consolidation and decline, and you should be ended up doing well here. I think it has come out after a 4 year barren run, in which the stock has fallen from 24, 2500 all the way to 1200, and it remained between 1200 to 1300 for many months, and now broken out, and now is around 17, 1800. So looks good on the charts, looks good on the numbers front. I think September numbers could be up and down because of the inflationary pressure, but I think December onwards, and especially next summer, Whirlpool should end up doing well, because they are the second largest, you can say, sellers in the refrigeration domain. They are one of the top brands in the top door washing machine. So I believe Whirlpool is something that one should really look at from a 2 years perspective and from a 4 to 5 year perspective as well, if the numbers continue to be good. Uh, be kind, thanks for your contribution. BLS International. So I need to have a look at what the stock is doing at the moment. I know about the company. Company is good. Everything is fine in terms of numbers, etc. Just to give you an idea on the technical chart, so I would have to just uh, look at the chart. I'm just opening that and will let you know. uh, First of all, I would like to say that if it is possible, stay with larger companies rather than the smaller ones. So in this case, it's a 5000 crore market cap company, trading at 40 times. See, if you have bought at lower levels, then probably it's time to book profits on any kind of moves towards say levels of 270, on new highs. But if you want to buy here, or if you want to really buy from a 2 year perspective, then I think better levels to get in is around 235. I think around 230, 235, you can definitely look at buying into it. If you have bought into it already, then hold on to the stock. I think the next level to look at is 280, and then 320 over the next 1 year time. I think it should end up doing well. Results were very decent, and I think results will continue to become better as we go along. So BLS on declines to 235, 240 uh, is a buy. So, in my opinion, Whirlpool is something to really look at. Asahi India on declines to 600. To look at Whirlpool at current levels around declines to 1700 is a very good buy. These two stocks should over well in terms of a 1 year return of 25 to 30%. Uh, Asahi India could be even better depending on the numbers that it produces. So I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help you grow the channel. That will help you also ask me questions and eke out answers in greater detail. Over the next 7 8 minutes, I'll be answering all your queries as well. So Godrej Aggrovate, in my opinion, is an avoid. I think if you really want to buy into mid cap consumer kind of companies, slightly larger caps, Tata Consumer on declines to 770, 780 is a buy. Uh, you look at mid cap other consumption players, you look at mid cap auto players to look at rather than looking at Godrej group stocks. uh, okay, Steel Strip Wheels, another of the companies that I really like. I believe, thanks for your contribution, first of all, Rajesh. I believe this is also a stock in the auto ancillary space that should end up doing decently over the next 2 years. Let me have a look at where the stock is at the moment, because this is one of the better steel frames, you can say wheel steel frames makers. Now it is at running at higher levels at around 13 times earnings, but is doing extremely well in terms of numbers. So this is also something to be looked at on declines to around 680. I think around 680, 690. This is something to be looked at 870. It's slightly stretched. I think on a 10 to 15% decline is where one should be looking at steel strip. If you get it around 700, best, but if you can get it around 800, 820, that's where one should be looking at, not at these levels. If you have bought into it, then hold on to it. Next level is closer to 1000 levels or so. The numbers and everything look good, and I think it's going to break out to even higher highs going forward. All right. So Jamna Auto is also a very good, decent stock to look at, and it has been consolidating between 115, 120. Hold on to the stock. The next level to look at is 150, 160 on the stock in 1 year time. I think 155, 160 is a possibility there. So Hindustan Foods has come out with not so greater numbers in June. We were expecting better numbers from it, although the stock is also down from the top. I think these are reasonable levels to hold on to the stock or buy more into the stock. But remember, it's just a 2000 crore market cap company, and it has been a very small cap company and gone up a lot. over the last 2 years. So taking that into consideration, you can take a 3 to 4% exposure into something like Hindustan Foods. Gufic Biosciences I have not looked at, so won't be able to comment. Balaji Amines or Alkyl Amines, etc. Most of the chemical companies are avoid. Apart from that, Vinity Organics is something to look at, and there are 2 3 companies that one can probably look at, but not a lot in the chemical space that I like. Pidilite is another chemical kind of stock or that one can look at on declines to 2600. A disclaimer: I am invested into Pidilite. Uh, so, Mr. Reddy, I have not looked at Gensol. I won't be able to comment on it. It has gone up vertically, and so any stock that has gone up vertically and became a multi-bagger, I would say, is an avoid first of all, and let it first correct or consolidate, and only then get into it or analyze. So, I won't be able to comment at this point of time. Tanla is a complete avoid. I think whatever rally had to happen from 35 rupees all the way to 2000 has taken place, and now whatever management is doing, I'm not comfortable with that. It's a complete avoid, Tanla. PSP Projects is a good company to invest into if you really want to get into infrastructure. I think the company is doing extremely well, getting orders, etc. Hold on to the stock, 20 to 25% upside over the next 1 year possible, but it's a good 3 4 year hold kind of a company, PSP Projects as well. Sterling and Wilson is an avoid. I think better look at larger companies into the consumer domain, which are churning out 20 to 25% profit growth and are expected to do well over the next festive season or so. That would be a better way to look at. A B kind Tata Elixir around 8,000 would be a very good level to get into. If you get a 10% fall in Tata Elixir from these levels, compared to any other IT stock. So I'm looking at Tata Elixir very closely. If it comes to 8,000, 8,100, those will be the levels to look at. See, if you are making money, Rajat, thanks for your contribution. If you're making money in Mirza International, you have doubled your money or gone up 50 60% in a few months, book profits, and then get into it again. It's a very good long term company, long term stock. I have made 2 3 videos on Mirza International already. You can go ahead and look at it. But overall, the valuations are getting stretched. So there could be a phase where the stock may not fall but will only consolidate and you'll lose time value of money. So it's better to book profits if you're making more than 60 70% and then get in again. If you're making less than that, then hold on to the stock from a 2 year perspective. Okay. So what else here? Fine Organics, good company. You can buy in the chemical space, but not no immediate reward. The stock has gone up already. Deepak Nitrite has consolidated. I think with a 10% stop loss you can buy, but I'm more comfortable buying into pure organized, say retail consumer plays rather than into companies which have a lot of exposure towards you can say a raw material like oil. So price fluctuations affect these prices a lot. So that's an avoid. Crompton Greaves is an avoid. They are the companies that you can look at in the consumer domain. Lux is an avoid. The numbers have not been that great, and the company has not been doing that well on the margins front. It's an avoid in my opinion. So that's a call on Lux, for that matter. Car trade is a complete avoid. I think you don't even need to look at such companies. If you really want to look at the newer age IPOs, etc., better to look at Nika at these levels rather than anything else. So Tata Consumer at these levels, I think people should book profits 840, 850, 860 and get into it on slight decline. On any up move towards 880, one should end up booking complete profits and wait for declines or consolidation to buy into these kind of companies. Okay. So Coforge, I think is good for long term LTTS as well. But the problem here is next 1 year or next 6 months, you could see the stock go down another 20%. So that's the only reason. Otherwise, Coforge has come out with decent numbers. It is a hold from a long term point of view, 3 4 year point of view. That's the call. Yes Bank is a complete avoid. There's no reason why one should get into something like Yes Bank in that sense. All right. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. We'll be online again on Thursday. Thank you.